Thank you very much, BerChain colleagues, and please be very welcome to our program, to our introduction to Decentralized Finance webinar. And today is a very special day here in Blue Swan Academy because we are kicking off this new program on Decentralized Finance, on blockchain, open finance. And this one will be the first of a series of webinars in which we will train professionals from different areas and in general the public in this revolutionary technology. And we are particularly excited about decentralized finance for several reasons. First reason is that taking into account the current context, the current situation in the world, the current uncertainty, the crisis that we are heading into, we are seeing a monetary and financial system that is having a lot of trouble. But at the same time, we're seeing a new, wholly new digital, blockchain-based, internet-based financial system that is emerging. We have these two dynamics happening at the same time. So I think it's a very interesting moment to start getting familiar with this new technology. The second reason why we find this very interesting is because decentralized finance is already market ready. We have hundreds and hundreds of products, market ready products, and it can help everybody in daily life. We all need in a daily life financial services and products. We need to pay or get paid. We need to transact or trade or invest. So all of it, for all these activities, there is already a product in decentralized finance. So we want to have an equilibrium in our program between like theory, explain how this system works, and practical knowledge. First, I would like to start with some words about Blue Swan and about our organization. So Blue Swan is a product development company in the blockchain space for around since 2018. And we are focused in three areas: in insurance, in legal tech, and in finance. The first product, so our vision as an organization, our vision is to reach a mainstream use of decentralized technologies and blockchain technologies. Our first product is Blue Swan Grading. It's a 360-degree analysis tool for crypto assets. We're tracking more than 600 crypto assets. And we aggregate information like market information, sentiment analysis on media publications, legal, regulatory, development, and so on. And we rate the different crypto assets. So take a look at this. We are going to open this product for the participants of this webinar, so you can check that out. It's a great tool for start to understand what are these new type of assets that are emerging on top of blockchain. And Blue Swan Academy, I am leading this project since 2 years. And we are an educational platform in blockchain technologies. We are working on two programs parallel. We are launching now in summer the program in blockchain law. So you can check that out very soon. In July, we have the first modules. And we're also launching these webinars around decentralized finance. And about myself, my name is Juan Escayón. I come originally from Colombia. I live here in Berlin since 6 years. Berlin is one of the world hubs of blockchain technology, so a very good place to stay. I am working in the blockchain space full-time since 3 years. And 2017, around, my first project was a pilot project of the government of Colombia in land registry. So at that time, there was a very political important moment in my country. There was peace negotiation with the guerrilla, and we were working on a pilot project with the government for writing land register using blockchain technology. And although the project didn't advance, probably it was a bit ahead of its time. It showed me how this technology can be so revolutionary because it can disrupt many industries. Almost every industry I can think of will be impacted by this technology. And it's also a technology that can change people's lives. And that's our motivation behind this program and this webinar. And next series of webinars is to introduce you to this fascinating topic of decentralized finance. So we are going to talk today about DeFi, about decentralized finance. So our agenda for today is following. We are going to start with a historical context, giving an overview of the current situation of the world. of the economic situation in which we are living in and why it is important to take into account when we talk about blockchain and decentralized finance. Second, we are going to define what is DeFi and what is the value proposition of this technology and why it is different from traditional finance. Third, we're going to give an overview on what can you do now in DeFi. DeFi is a lot of market-ready products that you can test, you can experiment. You can now put value, money, funds in these applications and start testing out the technology. So we're going to give an overview of what applications are out there. Fourth, we're going to give you 5 reasons why you should learn DeFi now. And lastly, we're going to get some first steps. How can you get started in this brave new world, in this decentralized finance world? So certainly we are living very special times. We are going through the worst pandemic of the century. Unfortunately, we have lost hundreds of thousands of lives, and we are still not yet through. This pandemic triggered the largest contraction of economic activity probably in the history of mankind. Here in this map, we can see the red countries are the countries that will have a GDP contraction. So we still don't know the effects of the crisis. We do know, if we read the headlines of the last weeks and months, that the crisis will be very serious. However, mankind has lived this kind of crisis before we were born, in the form of economic cycles. And these cycles have been studied by Ray Dalio, who he is the founding partner of Bridgewater Associates, the largest hedge fund in the world. Ray Dalio has studied the crisis in the last 500 years. And in this publication, which I highly recommend, The Change World Order, is everything for free in LinkedIn. He explains how these cycles occurs, and he describes 2 types of swings, 2 types of cycles. Yeah, we have a short-term debt cycles. These short-term debt cycles take around 8 to 10 years, and these are the cycles that we know. So the last one was the financial crisis of 2008 and 9. Before that was the dot-com and so on. But there are larger crises that take around 75 to 100 years, and there's enough data to support that we are in the late stage of one of these cycles. That's called a depression. The last time we had a depression was in 1929. These times often, not always, but often lead to conflict, lead to war, populism. In the last time that occurred after the World War II, a new monetary and financial system was established in Bretton Woods. Basically, in Bretton Woods, the new monetary system decided that the US dollar was the reserve currency of the world, and each dollar was redeemable for gold at a price of $35 per ounce. Each holder of a dollar could redeem it for gold, and all the other important currencies of the world were pegged to the dollar. And this system of Bretton Woods functioned until the 1971 Nixon shock. It was called the Nixon shock when President Nixon decided to eliminate the link between dollar and gold. So from this time on, the US dollar was not redeemable by gold. There was the birth of what is known as a fiat currency. Fiat currency is the currency that we have today all over the world. Fiat currency means that the currency is not supported by a commodity or by gold or by a metal. It is only worth what a government says it is worth. And we do see astonishing parallels between what we are living now and what we lived in the 1930s. Here, in the blue line, we see, for example, the interest rates. The interest rates were at 0 during the 1930s, and they are almost at 0 since 2010, in the last crisis. The other similarity that we find is this red line, that's the monetary base, that's the supply of money in the world. And we saw a large increase, so a lot of money printing in the 30s, and a lot of money printing since the 2010. And remember, that is before Corona crisis. We have seen that the increase of fiat supply has increased dramatically. since the last crisis, in the last year, you can see in the y-axis the amount of currency in the market. It was around, in the 2010 was around 8 trillion. And we are now, before Corona, reaching 20 trillion. Around $12 trillion were printed since the last crisis. But that is nothing in compare what we are doing now. We have probably never seen a bigger response of central banks as now to the Corona crisis. These headlines: Federal Reserve rolls out 2.3 trillion plan to stabilize the economy. So what does need to put into context how much money is that? Well, the GDP of the world is 80 trillion. And if the Fed is printing 2.3 trillion, then that means that 3% of, they are printing 3% of the GDP in 1 month. And that is one country, and that is 1 month. So that is clearly not sustainable, and there are risks in printing money. You risk diminishing the purchasing power because there is more supply. You risk devaluation, inflation, or hyperinflation. This was a very well-known picture of the situation in Germany during the hyperinflation in the 20s. This hyperinflation is not extremely unlikely if we continue to print money to the speed that we are going now. So why are we talking about this? Why are we talking about economic crisis and hyperinflation and money printing? Well, it turns out that the history of blockchain technologies and economic crisis are very deeply intertwined. What we see here in the screen is the first transaction of the first block of the Bitcoin network back in 2009. The anonymous creator of Bitcoin, and for those of you who are not familiar, Bitcoin was, nobody knows who created Bitcoin. He used a pseudonym, Satoshi Nakamoto. Nobody knows if he's alive, if he's dead, if he's a man or a woman. It's a complete mystery. But he or she or they wrote this secret message. The Times, January 3rd, 2009, Chancellor on brink of second bailout for banks. And they were meaning this headline of the Times in the UK, Chancellor on brink of second bailout for banks. They were reporting all the bailouts of the governments in the last financial crisis. Well, blockchain is a political technology, and this was a political message. The political message was to create a technology that can protect us against this type of scenarios. Blockchain likes secret messages, and we have a new one very recently. In block 629,999, and this is also from the Bitcoin network. And why is this block important? And I will make a small parenthesis because that is interesting to know. In this block 629,000, the monetary supply of the Bitcoin network was reduced in half. Yeah? So this is a graph that explains how is the monetary policy, how is the supply rate of the Bitcoin network. So you can see this is determined by a code, by algorithm, and this algorithm is fixed, and everybody can verify. And everybody can know that since 2020 and in the next 4 years, we will have an inflation rate of 1.7%. And that how it works is that there are a certain group of users, they call the miners. The miners validate transactions and blocks, and they get rewarded by the system. So before this date, April 2020, each block was paid, was rewarded by 12.5 Bitcoin, and now 6.5 Bitcoin. So the supply was reducing in half, and the inflation rate is half. So we have certainty that we have this inflation rate for the next years in Bitcoin. Now compare what is happening in the traditional world. Where money is printing trillions of dollars, and you have no idea what will be the inflation rate. Okay, back to the secret message. This secret message was written New York Times, April 9, 2020, with 2.3 trillion injection, but can far exceed its 2008 risk. That was a headline of the New York Times. And also reporting about these new incentive measures of central banks. Also a very political message. Well, since the last crisis, a lot of things have happened, and we have a new economic infrastructure in place, and this is called blockchain. And we have a new financial system that is emerging on top of one particular blockchain. We'll explain why. This is the Ethereum blockchain. But what is DeFi? Let us define what is DeFi and what is the developer position of this technology. DeFi stands for Decentralized Finance. It's an ecosystem of open financial products and services. So you can see, you can imagine it as it emulates the traditional financial services. So we have here on the left the traditional finance, and we have on the right the centralized finance. So in traditional finance, everything is based on a store of value that is called gold. Gold is a very good store of value. It has been used for thousands of years. And it is at the base of the system. Then we have the central banks, the commercial banks, payment companies, and other fintech, and then we have businesses that use all these services. On decentralized finance, you can access and provide similar services, but everything is not based on gold, but everything is based on crypto asset. This crypto asset is called Ether, is the native asset of the Ethereum blockchain. On top of it, we have a sort of central bank, but we like to call it a decentral bank. We will explain it why. It's a new type of reserve bank that is also digital and is also built on top of the blockchain. Then we have we have lending and borrowing platforms, and we have other type of applications that are being built on top of it. So for example, take an example, a very easy example of payment. You have a sender and you have a receiver, and for a simple transaction, you need several intermediaries. You need the bank of the sender, you need a payment company, which could be PayPal or SEPA or whatever, depends on the region where we are. You need a receiver bank, and then the money gets to your sender, to your receiver. For all of these activities, how the system works currently is that you need an intermediary. You need a financial intermediary for saving money, depositing funds, and earning some interest. Investing, buying financial assets, stock, bonds, ETFs, paying for products or services, borrowing, leaving an asset as a collateral or guarantee and taking money borrowed, or trading. For all of these activities, you need a bank. In decentralized finance, banks are replaced by money protocols. And what is the money protocol? Well, you can think of it like a money robot. It's a piece of software. It's a smart contract. It's called in blockchain. And this piece of software is capable of storing and transmitting value and connect autonomously. And that is very important because there is a radical difference, because while banks usually require permission to use it, they're not open. Money protocols are open, and everybody can use them. So we come to the first value proposition of DeFi, and this probably the most important one, and it is the permissionlessness. And permissionlessness means that everybody in the world can access the financial services only with an internet connection. And then let's think 1 minute about it, because this is huge. This means that we are democratizing finance. And we see parallels to the first era of internet. First era internet democratized access to information or data. However, it is incredible that we have in our cell phone access to all the information, all the encyclopedias, what we can imagine in our pockets. It's the democratization of information and data. Well, this new era of internet, this Web 3.0, is the same, but for value. We are democratizing access to value. We are democratizing access to finance. And that is huge. Remember that there's a large percentage of the population that does not have access to banking services. And why not? Maybe because they live in a country that doesn't have the structures, financial structure, banking system, or there are all of the political problems, or maybe a lot of users are maybe too poor, or don't have assets, or don't have income. They are too not interested for the financial system. Well, we can now everybody in the world, doesn't matter where he is, can access the system. And for example, you're in the countryside of Colombia, you need to get money borrowed and no bank in Colombia gives you money, then you can, it is possible, and now it is possible to make a virtual representation of an asset that you have, for example, a property. You can tokenize it, this process is called tokenization, and you can put it as guarantee and then get money borrowed. And that is huge. That can make a huge difference. It means universal access to financial products and services with no discrimination. So for example, for borrowers, we already put example, we have the possibility with this technology to grant universal access to debt. For savers or for borrowers, we have, for people that save money in a bank account, we have access to low inflation currency, and that is very important. We already mentioned in the first part of the presentation the risks of inflation that we have. Well, it doesn't have to be hyperinflation. There are a lot of countries in the world that have inflation, or big economies like Argentina that have important inflation rates. Well, you can have part of your wealth in crypto asset and hedge this risk of inflation. Another important point is the privacy related issues. Normally, these decentralized finance don't require personal information, don't require ID or telephone number or email. So they don't store personal information. So if they don't store personal information, they cannot be hacked. The second characteristic of DeFi is its transparency. And maybe we can start with the opposite example. What is not transparency? Well, not transparency is what happened in the last crisis. Remember that there was an opacity regarding the assets, these toxic assets, right? Nobody knew how much debt was in the system. Nobody knew how risky these assets were. There were these manipulations of the rating agency. So the system is not transparent. Well, we now have the opposite. We now have a system that is auditable, and which every transaction is visible. Every transaction is traceable. So here we have an example. I will put the link in the notes. You can follow. This is the account of Vitaly Buterin. This is the creator, inventor of Ethereum. He was 18 at the time he made Ethereum, and he has a lot of users. He has a lot of money, and you can see each transaction, how it goes from account to account. It's like taking the books of a company and put them inside out. Transparency means transparent monetary supply. We already saw the example of Bitcoin. This is the monetary supply of Bitcoin. Every 4 years, half. We have here the monetary supply of Ethereum. That's a bit more complex, flexible, but it will be around 1%. Transparency is risk management. And this one is a nice example. We don't have to get into the technicalities, but this is the solvency rate of very special cryptocurrency, a stable coin. It's called DAI. We will talk a little bit about DAI later in this presentation. Basically, how it works is that this cryptocurrency is supported by collateral, and it has to have 150% collateral to be solvent. And you can see here real life, and you have all these tools. You can look for this real life if the system is solvent. If you see, well, it gets below the green line, you say, oh, maybe there's not enough collateral, maybe I should do something or take my money out. Imagine if you could do this with a bank or with a government to check the solvency. We have no idea. So transparency means rules of the game that are embedded in open source code, publicly verifiable, and you can audit all the transactions. The third value proposition is neutrality, and here we have a German Autobahn highway. So decentralized finance is a new system, it's a new financial infrastructure. And everybody in the world can get connected into this financial infrastructure. It's a public good. And it's a public good that has particular characteristics. One is that it's fully decentralized. And being fully decentralized, no single party can control it. No single party can stop it or censor it. Nobody owns it in a legal sense. And the fourth and last value proposition of DeFi is trustlessness. And it's in a way, it's like the consequence of these three characteristics I already mentioned: transparency, neutrality, and permissionlessness. There is a motto in blockchain circles: they don't trust, verify. So you don't need to trust your counterpart. Usually, when you business, you have to trust somebody. You have to trust your representative, your agent, or you have to have a trust, a level of trust in your counterparty. Well, you don't need now. That's why it's called trustless. You trust the network, and it's not like a faith. It's verified. Don't trust, verify. You can verify everything. You can verify the transaction. You can verify the monetary supply. You can verify the solvency rate. Everything is there. And this whole system is also trustless because it is based on a ledger. It's called blockchain ledger. It's a very special ledger, specific properties. It is tamper evident. It is almost immutable. It is technically possible to change, but it is economically unfeasible. And there are very deep mechanism in game theory to protect the network. But it's a very trustworthy ledger, almost immutable ledger. And this ledger is also suitable for issuing assets and settling assets. Another aspect of trustlessness is its non-custodialship, and that's also a very interesting feature. Users always have control of the assets, and that is very different. You think about the financial system, that is different. When you have money in a bank account, well, the bank has custody of the funds, and the funds can be freezed or can be censored, or the bank can go broke, or the monetary system collapses, and there is a panic, and everybody wants to get the money out, and there's a bank run, and maybe you have trouble getting your money out. Well, that is different in DeFi. In DeFi, you always have control on the funds, and this is a very powerful value proposition. So let's see what type of things you can do now in decentralized finance. And basically, this list is not exhaustive, but basically all the financial services that you need on a daily life for consumers, saving, borrowing, things that you do in an everyday life, or things that you do from time to time. For business, we have been seeing a lot of new applications for running a business without financial institutions, payroll, accounting, invoicing. And the system is growing very, very rapidly. And then how it works is, this is composed by a set of layers. We have 5 layers, and the system is under construction. So taking into account that it's super new technology, and is still being built. The first layer, layer 0, is the staking layer. And staking will be a very hot topic. Staking means it's a new, without going into technicality that can be very complex, it's a new concession mechanism that will be that will be applied in the Ethereum blockchain, maybe in Q3 probably. Basically, you have to leave Ether, the asset, as collateral, as guarantee. You have to leave staked, and you contribute to the validation of blocks and transactions. And you get a reward, and you get a return rate, and that works very similar to bonds. Some say that it will be the birth of the global digital bond market to receive a fee, a yield, and this yield depends on how much Ether is being staked on the system. So that will happen in the second half of the year. We will do webinars exclusively on staking because there are interesting revenue opportunities in staking. Can you say a lot of people did a lot of money in the first Bitcoin years mining, so some say we have the same opportunities here, staking Ether at the beginning, because you can see that at the beginning we'll have not that much Ether staked, so return rates come up to 18%. So that's the first layer. The second layer is the decentralized global reserve bank. So imagine we are decentralized at the central bank. And what's the central bank task? Well, they control the supply of money, and they print money. And in this system, every user can print money with the requisite that they leave a collateral. They have each person has to leave 150% collateralization rate to print new dice. And dice is a cryptocurrency, decentralized cryptocurrency, stable coin is called, with respect to the value of dollar. And that is the currency, it is established as the currency of all DeFi. And then you have a lot of platforms for borrowing money and lending. Here is the screenshot of lending platform. Aave is one of the most user-friendliest platforms. And there are here on the left column are different assets, crypto assets, and you can see also different interest rates that you can earn. These interest rates are varying and depending on the platform. Everything is higher than what you receive from your local commercial bank. But beware of the risks. Yeah, so yields, interest rates are higher than normal world. Well, at least in the developed economies, Europe and the US, the interest rates are hitting zero. So you will have better yields, interest rates in DeFi, but there are also risks, and the main risk is that the technology is very new. Many products are testing, and we still don't know. Many of the risks are involved, but some of them are market risk. These assets are very volatile, regulatory and legal. Almost nothing of this new technology is regulated. And if you're talking about securities are regulated in the whole world, and it depends on where you are. There are parts of the world, countries that are more permissive, that are more restrictive. Here in Germany, in Europe, Germany has a very forward-looking policy, like letting people test out the technology and communicating with the industry how would be a smart way to regulate this technology that doesn't hinder innovation. We have also decentralization risk. That is, decentralization is a double-edged sword, because fully decentralized system means that no human is in control. So if something goes bad, or the software has a bug, and there's not an off button, and that is a risk. You have technical risk and economic insensitivity. So this technology has a lot of potential, but there are a lot of risk, and we as Blue Swan can help you out identifying these risks. And last layer, layer 3 and layer 4 is the application layer. We have a lot of different applications that are being released. We have decentralized exchanges. We have synthetic assets, smart bonds, derivatives. We have prediction markets, automated market makers, everything. And all of these applications are composable. And that's a very interesting feature. Some call them money Legos. Money Legos means that anybody can build new stuff by putting it together like Lego pieces. The applications are really composable, interoperable, and open source. And by now we have the system, as I explained, is exploding. More than 200 applications. We have weekly releases of new products that are coming out. So why you should learn about DeFi now? I'm going to give you 5 reasons. The first reason, we are very early in our journey. And this is the opportunity for front-running opportunities. Bitcoin is 11 years old. Ethereum 6, DeFi 2. You see, if here we can see like the market cap. Market cap, for those of you that are not familiar, is like a way in traditional finance to know how much a company is worth. The market cap from DAI, from this stablecoin, is 120 million. The market cap of the whole DeFi ecosystem is 950 million. The market cap of Ethereum is 23 billion, and the market cap of all the crypto is 250 billion. Well, that's not bad for 10 years, but that is nothing in compared to traditional finance. And what we expect is that DeFi captures these big markets. Equity in a market is 90 trillion. Debt markets, 250 trillion. Derivatives, 540 trillion. So these are big numbers. We are just at the beginning. The long-term potential is huge. Also the user base. So it is still niche. We have 180,000 daily users of DeFi. That's like a small city, right? But it is a 100% increase from January, inclusive the market crash in March. So the question is, if we keep this pace, when will DeFi become mainstream? Second reason why you should learn DeFi now. We are developing the skill sets of the future, the demand in the future. So you remember probably how were web pages in the 90s? Well, learning DeFi now is like learning web design in the 90s. There will be a new skill set that will be demanded by the market in the near future. We need technical knowledge to understand the technology, how this money robots, these smart contracts, these protocols work. We need traditional finance knowledge, of course. We need legal knowledge to find compliant legal structures for all these products. We need economic skill sets. And we see that professionals from every area are coming into this industry and is building things together. Not only investors or developers, but also lawyers or even psychologists that help us build the incentives that are behind all this products. Third reason why you should learn DeFi now. We have short-term revenue opportunities and passive income opportunities also. So for those of you who have crypto, most of us that have crypto, they are like sitting idle in a wallet only with the expectation that they will increase in value. Well, now we can put our crypto money to work. We can earn interest. These are recent table of interest that is interest in DAI. You can see that it's not much higher. They were, before the market crash, they were between 8 and 10%. Now they lowered, but they are starting catching up again. And these assets can hedge against inflation. As I mentioned, this news come from Paul Tudor Jones. Well, he has a 7 billion fund, and he's a traditional investor, and he recently said that 1 or 2% of his portfolio will be in Bitcoin, and 1 or 2% of 7 billion is a lot of money. So we have this segments of traditional finance investors, traditional world, that they are looking into crypto, especially at this moment, at this very uncertain moment. There are a lot of passive income opportunities in DeFi. I just mentioned a few ones, like lending out money with yields between 1% and 5% recently. Liquidity provision, so there's a small riskier, more advanced opportunity. Basically, there are decentralized markets, and you can provide liquidity to the decentralized exchanges and receive a part of the transaction fees that traders use. You can stake, as I mentioned, you can put your crypto asset as a guarantee to help validate transactions and earn a yield that depends on the volume of collateral. You can do option trading. You can have a lot of other passive income opportunities. Fourth reason why you should learn DeFi now. The current crisis will accelerate the adoption of crypto, and I think in many senses, not only because of the crisis, the risk of inflation, the risk of even collapsing the whole system, but also because it will accelerate the digitization of the economy and the currency and digitization of finance. And you probably heard the news about China trialing a central bank digital currency. That's a super interesting topic. It is not yet sure if it's exactly blockchain or more DLT, decentralized ledger technology. But if China goes on with the project, then Europe and the US will do it also. But what will happen if you have competing countries in a turbulent economic situation that they don't trust each other? Well, we see the potential that this financial system, this neutral, permissionless, transparent financial system, accessible for everybody, can be like the global infrastructure where all of the other assets are being traded and settled. In depression times, people tend to go back to hard money. Yeah, we have when the economic cycles, as I explained at the beginning, people start with hard money, that's like gold or a commodity. Then it goes to claims of hard money or commodity money. That was the dollar before Nixon. But you can redeem the the currency for a commodity, and then you have purely fiat money that doesn't have any guarantee. So the people in this type of they tend to go back to hard money, to gold, and we believe this time a lot of people will look at digital gold, that is Bitcoin, that is Ether, that is crypto assets. And the last reason is because we believe that DeFi is a better financial system. It's a better money for the world, for us. It's democratic. It's transparent. Everything is publicly verifiable. It's inclusive. It's non-sovereign, not dependent on a specific country or a currency. It's efficient. We haven't talked at all about efficiency, but yeah, when you see that with this technology, we can send money in seconds and with almost no cost. Then you see how much potential we have to get better in our financial system. And lastly, is a global and digital system and currency. So currently, how it evolves is that each country has its own currency, and we have the dollar, and we have the peso, and we have the euro, and the yen. We have all the different currencies. And you do international trade, and you have to exchange, and that is not very practical. Well, we have here a global asset, a digital asset, Ether, and a stable coin, DAI, and it's the same one that my business partner in the other part of the world will use. So probably many of you ask how to get started in this world. So we will going to give you some homework. And
Juan, maybe this is a good point to also connect it with one question that came from the audience. That
yes,
that's right away. It is given that the only way to access DeFi at the moment is to already have a crypto asset to use it as collateral. What are the challenges that you see for unbanked or non-crypto users to enter the space? And I think this fits probably nicely with what you're going to talk next.
Exactly.
Quick reminder for the audience to ideally use the Q&A function and post the questions there. You should see an icon to ask questions in your menu. This allows us to keep track of the questions in an easier way.
Mm-hmm. For me, the most important challenge is usability, is user experience. And like this technology is so new, you can imagine we are like in the internet in the 90s before Netscape. We still don't have the Netscape moment in blockchain. And that's one important hurdle. And the tools that we're going to introduce here are the best one that we have currently. And it's not yet there where we want to, we need to become mainstream. So it's still the technology is a bit too techy, it's a bit too niche. It's still not, we are missing a few years of development to reach this path to going mainstream. That's one point. The other point where I see a challenge is in the fiat ramp on product. So to explain what is, there's still a lot of friction when you try to exchange your fiat currency to a cryptocurrency. And that is exactly this first stage. The first thing that you have to do, you don't have necessarily to leave a collateral to start playing in DeFi, but you need an asset. You need an asset to start generating interest or to lending out or to staking it or putting as collateral. So this part is heavily dependent on where you live. So that's why the first, we have included in our website all these instructions, and we will send them via email. But this is an important stage because for many it's the most complicated one. And depending on where you are, there are exchanges, these are banks. You know? Like Coinbase, Kraken, these are very good. That's so US, based in the US, but work very good both in Europe. In Coinbase, you can buy it with credit card. In Kraken, you need a wire transfer. Panda is one very well known in South America, Colombia, Argentina. And to go in, then you have to register, and it's called like KYC, know your customer regulation. You have to identify and proof of residence and all this usual stuff for opening an account. So you have to enter that way. It's like a traditional financial institution with a banking license, a normal bank. But there you can exchange, and you can exchange, you can deposit your local currency and trade it for a cryptocurrency. So what we recommend is to start with Ether, because Ether, perhaps Bitcoin, and that's what can take usually a few business days. So we have included in our website so basic instructions to follow the steps. And if you are having trouble in your specific country, you can reach out. and see if you find a platform that is available in your country. But this there is some friction when we try to go between the two worlds, the traditional and the crypto world. So that's the first. You have to fund. You have to get some crypto. The second, you have to learn what you got, and we are focusing on our DeFi webinars in basically two assets, in Ethereum and Bitcoin. And we have this amazing tool, Blue Swan Grading. We are opening the tool for all the participants of this webinar. Take a look at the metrics, how it looks like, what type of data can you get, what type of data can you get that you cannot get in the traditional world, and start learning what they are. What are the characteristics? What are the metrics? And the third is opening a wallet. And a wallet is a piece of software that let you manage an address, an Ethereum address. Address is like a bank account, but without a bank. And you need this address this address you can store your money, your funds, but you can also transact with other people or with machines, or you can interact with the blockchain. You can interact with smart contracts, with the code itself. So we recommend two wallets. This one is MetaMask. That is the most widely used. As for desktop application, it's an add-on in Chrome or in Brave or in Firefox. You can install it very fast. And this one, Argent, is a new one that was released some weeks ago, I think last week even, and it's mobile and it's user-friendly. So we don't have any relationship with any of these companies or projects. We choose them here to recommend to you because they are the easiest to use, and that will give you the best user experience. And we have included all the instructions to get through. So the idea is that you go through these 3 steps, and then you fund your wallet. For this, you have to go through your account in Coinbase or in Kraken or wherever you bought the crypto, and you have to make a transaction to your new Ethereum address. Those are like the 4 stages that you have to complete to start playing, to start experimenting, to start testing with the technology. And this will be interesting from the next webinar on. We are going to start hands-on training you to use some of these platforms, and it will be good if everybody has already installed a wallet and an address. So a disclaimer, this stuff is risky, the technology is new. You can start seeing what possibilities you have for investing money, for earning interest, but take into account that it's still risky. There have been attacks, there have been bots. Consider risk-reward relationship. Don't chase the highest deal. Always do your due diligence like you do in other world. And of course, everything in this presentation is not financial, tax, or legal advice, and it's only for academic purposes only.
Don't put your lifetime savings into crypto.
Don't put your retirement money. Don't yet. So the next steps is complete these assignments. We can very gladly support you also on a one-by-one basis. If you go through it, you have trouble opening the account, buying the crypto, installing your wallet. You want to receive the information, then send us an email, and we'll send you all the information via email. We will issue a certificate of participation, the proof of attendance protocol. When you have your Ethereum address, you will receive an NFT, a non-fungible token that's a special type of asset, and that will be delivered to your Ethereum address, so you can start have a feeling of what types of things you can do with Ethereum addresses. The next webinar will be the idea will be that we have these webinars on a monthly basis, the first week of the month, and the date will be released very soon. And we have also included a formula, so your feedback will be very important. So thank you for your attention. Follow us on Twitter. We have publication regularly on Medium. Send us an email or visit our website where we currently update information about this and other blockchain topics. And thank you for your attention.
So yeah, thanks a lot for that, Juan. I think that was a very great introduction, appreciated by our audience, hopefully. And I think 2 points now. First of all, I think we have a number of questions that are in the Q&A, and again, shout out if you would like to ask more questions to Juan. Now is a good time to do so, and we still have some time left to go over questions. And the other question, Juan, I think if people want to sign up for your webinar and they haven't gotten in touch with you in any way yet, what's the best way to stay connected with you and register for your next webinar if there is interest? Maybe
Yeah,
you
sure.
want.
Absolutely, you can send us an email to our address, academy@blueswan.io. You can go to our website, academy.blueswan, where we have also a form where you can sign up to our newsletter. So the best way would be to go to our website, register in our form, in our website, or send us an email and we will send you complete information.
Perfect. So now we have some questions. First question is, you said that there are some permissionless borrowing platforms. What will happen if I can't pay back the money I borrowed? There can't be any negative tokens, right?
Yeah, that will never happen because all the system is over collateralized. So if you get money borrowed, you have to leave a collateral. It's another crypto asset, and the system is so designed that if the price, for example, of this collateral decreases, like it happened recently, the market crash, then the system automatically liquidates the position.
So the way I understand that, Juan, that means if the system has a value of 100, the collateral has a value of 120 or so, that in case people default.
Exactly.
Okay.
The system tracks the value of the collateral. What happened in the market crash now in March, the whole crypto market crashed more than 40% in one day, the worst day in crypto, in the 11 years of crypto. And what happened is that many positions were liquidated because Ether, the asset, decreased in value more than 40%. So the collateral, it was used as collateral for many debt positions. These debt positions, a lot of them were liquidated automatically, and many people were angry because nobody was expecting this sudden crash. But the system is designed that when there is a drastic movement in the market value, then liquidate the position. So the money is always paid back. And if you compare it with the traditional system, it's interesting. So we have in the traditional financial system, we have this fractional reserve banking, and we have this, it's like the contrary. Yeah? You have a little bit of collateral for large positions, and in this system, you have an over collateralization for every activity that you do. So every debt position is over collateralized.
Okay, thanks, Juan. So we have another question here. Is there any prediction related to Ethereum 2.0 and what will happen with all the DeFi ecosystem?
Yeah, well, we are very excited about this. Is the most important technological breakthrough of the Ethereum blockchain. You can imagine that the capacity of Ethereum will multiply by 64. The technology is called sharding. It's a complicated technology, but you can imagine the highway. You currently have one way, and with Ethereum 2.0, you will have 64 lines. 64 lines. And it is also this new system, this proof of work for stake system, that is much more like environmentally friendly. Currently, Bitcoin, Ethereum, they work with another consensus mechanism. It's called proof of work, that requires that users that validate transaction make a lot of computation, and that consumes a lot of energy, and that's clearly not sustainable. So this new system is much more environmentally friendly, and it's much more democratic, because the rules will be that you have to go in at least with 32 ETH, and you stake this 32 ETH, you have to stake them at least 1 year. And the first time, in the first year, you will not receive interest, only in the second year, and then in the second year, they will start yielding 18% only in the second year. But all people are very excited because that will resolve some of the scalability problems that currently the Ethereum blockchain, all blockchains, but Ethereum and Bitcoin have had scalability problems, and they're not like capable of processing too much transactions because everything is decentralized and redundant. So centralized systems are more efficient, and this will help this in scalability also. So I think Ethereum is growing to become a financial system that is robust and that can hold the financial system of the whole world. And we're very excited about it.
Thanks, Juan. So now we have another more technical question. Is it possible to develop dApps in any programming language?
Well, then that's a bit away from my expertise, but Ethereum, the most common coding language is Solidity. And I know there are some applications that use other programming languages, but I don't know much more about it. So the most common language for coding in the Ethereum blockchain is Solidity. That is, as far as I know, the syntax is very similar to JavaScript. So for a developer, it's easy to catch up. And for a non-developer, I tried it and uselessly to learn to code Solidity. But for developers, it should not be very complicated. Solidity is the most important one, probably will be the most important one in the next years, but we still don't know on the long term if it would be like established as the coding language that you have to learn. But right now, it's the most common one, Solidity. If you want to learn to code smart contracts, start with Solidity. If we have, we can send you links of very good resources that you can check out, online courses, that you can check that out if you are interested in doing Solidity coding courses.
Okay, thanks, Juan. Then there was a question that slipped through, which was, is there any mechanism to limit the volatility of Bitcoins? General question, which probably could take hours to answer in itself.
Yeah. Well, that's the market, right? This is it is free market. This is almost a perfect competition here. Is you have a market with no boundaries that everybody can access, and that's the beauty of it. And in this perfect competition, we are in a very early stage. These are very new assets, like I told, so 10-year-old assets, and in early phases of assets, they are highly speculative also, and maybe you have to wait some years until the assets are more mature and less volatile. But what this DeFi system came up with, and that's very interesting, is this idea of the stable coin. And so you have Ether is a very volatile asset, so you cannot do much. So you cannot pay things because if it's changing value, you cannot use it as collateral because it change value. But you have this stable coin. This stable coin is called DAI, and is like more technically speaking, is a derivative. It's a stable version of Ether. So you have in DeFi a stable version of Ether that's called DAI, and there is this decentral currency that everybody can issue, and is backed by Ether, and it is being used for payment. So normally I wouldn't like to pay a pizza with Ether, but I would like to pay a pizza with DAI because it's stable, and not with Ether because I expect that Ether will be volatile or will raise its value. I don't want to give that out, but maybe I want to spend DAI as a stable coin that's more usable, more suitable for other use cases. So it depends on what you want to do with the money, and the world of stable coins is in the prices, and I haven't. I show you charts about it. The growth of stable coins since the March market crash, they doubled the market cap. It is showing us that people in the last, that people are not fleeing out of crypto, but are fleeing from crypto volatile assets like Ether and Bitcoin to crypto stable assets like stable coins. And this world of the stable coins is super interesting. We will give webinars only for stable coins because they are a sort of important piece of the system. And there are many kinds, different kinds. Most of them are centralized, meaning centralized that there is like an exchange like Coinbase or Gemini. They all have their own versions of stable coins. But the one that we believe that has more potential is this DAI that is decentralized. And it is this open, permissionless asset that does not depend on an institution to issue it or to settle it, that everybody can use freely, and it has a huge potential. But in comparison with our stablecoins, it's rather small. But that's a very important topic, and we will deliver some modules around this because they will play a very important role in decentralized finance.
So today, a user has the possibility to deposit his volatile ether into a smart contract that then gives him stable DAIs that he can use for day-to-day payment. And then if he wants, he can also re-exchange his volatile, his stable DAI into back into his volatile ether.
Exactly, so, that's possible. That's possible with two clicks.
Okay,
and that's a very cool feature.
Then we have another question from Pranav, more technical. Is it possible? I know we already answered that one, so we can mark that as done. Would you describe smart contracts as programs? And if yes, what happens if it crashes? So more technical question.
Yeah, there are computer programs. Actually, smart contract is a terrible name because they are not smart and they are not contracts. And they are like a piece of software that runs on a blockchain. And this piece of software is a very particular software because it can run autonomously, right? So you can, it always needed to be triggered from a human being, but once triggered, they start running, and they have particular characteristics that other software programs don't have. And you can assign them value. You can like deposit fund to the smart contract, so the smart contract can have enough funds for paying transaction fees. Each time you do something with the blockchain, that you interact with the blockchain, you have to pay transaction fees. In Ethereum, it's called gas prices. You have to have the smart contract has to have enough like funds either to pay this transaction fee. So if the smart contract has enough funds to pay its fees, it can run autonomously. And what happens if it goes wrong? Well, it depends. The smart contract has, in computer science, it's called deterministic logic. So it always runs as programmed. And if you say that the smart contract does not have a possibility to pause or to stop, then it will not stop. It will stop only when the funds are over for paying the transaction fees. But you can program the smart contract to say, no, you have a human can have a key to access, to stop it, an emergency shutdown, for example, if something goes wrong. And actually, that's the way to go, because we don't want to build decentralized autonomous system that we still don't understand. So all this DeFi, like decentralization, is like an ethos. It's like an objective that the technology wants to go to. But every project normally starts with some degree of centralization, meaning by centralization, that a human has control on smart contract. But you see in also the trend, all of these many of these platforms are establishing like decentralized governance systems. It's super interesting, and we can talk in another opportunity about it. Yeah, it depends how you write the code, and the code will do what you want to say to do.
Okay, so we can. Then we have one follow-up question that I think is a good one to take. Is Litecoin to Bitcoin what DAI is to Ether?
No, it's different. Litecoin is a fork of the Bitcoin network, and to explain a bit what fork means, all these platforms are open source. There is a website called GitHub, and the developers write the code there, and everybody can see it. Everybody, that's open source. Everybody can see the code. Everybody can copy the code and make their own. I could take the Bitcoin code and copy it and make my own Bitcoin network, right? And that is fascinating because that is totally new. Yeah, you can opt out if you don't like using Bitcoin. I don't like, well, maybe it's too slow, too expensive. Well, I take the code, I make the change that I consider good, and I take my own, I build my own network. And that was exactly what happened with Litecoin. It's a fork of the Bitcoin, and it's a bit, I think the blocks have a larger capacity. That's a bit faster than Bitcoin. So those are two different blockchains. And DAI and Ether are a bit different because both are based on Ethereum, on on the platform Ethereum. Don't forget not to confuse the platform with the asset. So we have the platform, we have the blockchain, that is Ethereum, and on top of Ethereum you have the asset Ether, that is the native token of the Ethereum network. And DAI is another asset on top of the Ethereum blockchain, and it's Ethereum, like, why Ethereum? Because it's the most important blockchain that you can write smart contracts and run smart contracts, and almost all of the DeFi and all the crypto assets are being built on top of the Ethereum, following a standard that is called the ERC20. That is a standard for fungible tokens, and the DAI is one of this. And it's a standardized token that is built on top, that runs, that lives in the Ethereum blockchain, and it is the same. It's like I explained, it's a derivative, it's a stable version of Ether.
Okay, so now we have another question. Which Oracle providers would you prefer? I guess that's also maybe a DAI specific question. Or
yeah, so oracles, for people that don't know, blockchains don't know what happened outside the blockchain world. Blockchain can only read things that are on the blockchain. But for these applications, for example, we need a lot of information of the outer world, of the real world. And then that is what oracles are for. Oracles are like ways of getting information from the outer world. You can, I don't know, the price of an asset, the temperature, whatever data you need from the outer world, a device, an IoT device that measures something, and you need an oracle. And this is a problem because oracles are centralized, and if it's centralized, there is a risk. What happens if somebody is corrupt and try to manipulate the value of the data, or the system breaks and so on. So what is happening is a lot of DeFi projects are using Chainlink, and Chainlink is like use a lot of different oracles. And by using a lot of different oracles, it tries to decentralize this risk of one single point of failure, right? So the whole crypto ethos is about trying to reduce the centralization risks. And one way is in this oracle is using as many as possible, like to try to diversify the risk. And Chainlink use a lot of them, and I know a lot of projects that are using particularly Chainlink. And there are also, but more in experimentation, on-chain oracles, particularly Uniswap, but this is a decentralized exchange, automated market maker, and it is being used as a price feed and as an on-chain oracle. And some projects are starting to use this, but it's still a problem. It's still a problem to have a reliable source of information that is not that doesn't have a single point of failure.
I think there was a follow-up question regarding that, specifically saying which Oracle providers accept Chainlink.
Okay. No, I don't know. I don't know. There are a couple of them, but I specifically about each Oracle, I don't know. But the point is, it's not like one is better than the other one. But the point is how to have a lot of them and not only one. How to decentralize the source of this type of data, this type of information.
Okay, perfect. All right. So if there is any other questions, now is the time to ask them. And there is still a few minutes left, so we can give like a few seconds to see if anyone else has an open question. Okay, looks like that's not the case. So Juan, any closing words from your side?
Well, take into account, so our message for you is this revolution will come. This revolution is already here, and it will bring a lot of opportunities for us all as persons and as business. We are in a very particular moment of time in which we will live a recession that nobody of us has lived in our lives, and we will see in the next months and year a very turbulent economic situation worldwide. but you will also have the opportunity. We now have an alternative to look at this new, purely new digital internet native financial system and money, and take a look at it, because it's a revolution that is now starting, and it's a revolution that will come, and it's better to be prepared for it, and it's better to be early to grasp all the opportunities and front run all the opportunities, because we are very, very early in our journey. And we as Blue Swan are very happy to guide you and hold your hands in your journey, in your journey to using this technology. So you're very welcome, and we are here at your disposal.
You definitely position yourself as a knowledge authority today in decentralized finance fund.
Yeah, thank you.
Thanks a lot for that. We hope you'll get lots of follow-up messages of interested crypto newcomers. With that, thanks a lot for all your attention. I think you know how you can stay in touch with Blue Swan, and if you would like to stay in touch with BerChain, you can join our Slack channel via our webpage, www.berchain.com. Join our Slack channel or follow us on Twitter. So we hope that you enjoyed this webinar, learned a lot of new things about the world of decentralized finance. And we are looking forward to following up with you in next webinars and events. So with that, please stay healthy in the times of Corona. Take care and have a great evening.